Hey all, welcome to ShareTrek. This is Raj here. Friends, I hope you had a good day at the markets. And I think everything is shaping out the way we look at the technical analysis. Things are working out perfectly. But there are some risk factors here and there because any catalyst from outside, like Trump suddenly deciding that he's not going to have tariffs anymore, or he decides that he's going to have no tariff between, let us say, Europe, Britain, and US. Anything that he says like that could change all the equations, and that can go on top of these technicals and overpower the technicals. We have to keep that aspect in mind. So with that said, I think today saw a good amount of decline in the stock market overall, and I've got the S&P 500 futures out here. The market is still open, and we can see the price activity continue beyond where it left off. And as you can see, we see a little bit of green out here. This small little green is the candle for the next day, that is post-market activities for the next day, which has started right now. And it's a little bit positive, but it's too early to say anything. As you can see, MACD is bearish, and you got momentum also below average. So having said that, let's go and have a look at the actual S&P 500, because that's where we'll get an idea of where we actually ended today. And I'm just adjusting this chart so you can see properly. You will see that in the morning we had drawn these two lines, and I said that the bearish flag target has been achieved, and now it has morphed into a bearish pennant, and bearish pennants usually break down on the downside. We attempted to break down on the downside today, and this diagonal line of support of the pennant actually helped us to stay within that pennant. But tomorrow is another day, and our support from yesterday at 5,280 has now become a resistance. So we are going to be limited by this diagonal line of resistance, and we are going to be limited by this diagonal line of resistance. And if we break down the way it is supposed to be for a bullish pennant most of the times, then we are looking at further downsides. If we break out on the upside, we have a whole lot of resistance. For the matter, this resistance at 5,283 is going to be very tough, because it's combined with the 9-day exponential moving average, which is this red wavy line that you see here. It's the 9-day exponential moving average. They are both together, and they give formidable resistance. And then if we break that, then we have resistance at 5,300, approximately 5,373. That was a very significant resistance which we broke down from. We tested it and we came down, and therefore I don't think we are going to reach out there unless there is a big catalyst in the market. So having said that, I think I would like to give you a little bit of my own thought process with regard to this chart. So the key support held around 5,125 and 5,150, which is marked by this green horizontal line, and that has been the diagonal line, and that has been giving us a whole lot of support. And the lower trend line of the pennant is still holding, and this line will be critical for tomorrow. And there is resistance at 5,298 to 5,300, which is a very strong resistance. That this is the one that we are talking about, this line out here. And this level is where the bulls have repeatedly failed to gain ground, and it coincides with the breakdown area of a previous flag. So that is the reason why it is very critical. And RSI is at 14 at around RSI is at around 37.9, which is basically bearish territory but not yet oversold, which means there is plenty of room for further downside. And MACD is negative and curling down with the signal line rejecting a bullish crossover. This adds to bearish conviction. And I think the macro intra-market context is that the 2-year by 10-year treasury spread was at 0.66 when I was writing the script for this. Let me go and check where it is right now. Well, as you can see out here, we have the 2-year to 10-year spread at 0.64. Anything above 0.50 indicates a lot of burden on the system. 0.64 makes it very unstable. So this is something that we have to worry about. Not many people are looking at it, and I also start doubting myself whether this means anything at all. But the fact is that the difference between the 2-year and the 10-year is keeping on increasing. 10-year yield is continuing to go up, which means 10-year is out of favor and the 2-year is more in favor. limited risk for the participants. And if this thing continues, then I think there's going to be a big imbalance in the bonds market. That's my personal opinion as a retail investor with very rudimentary understanding of the bond market. But I have some thumb rules. This is one of those which I follow, and I think that 0.64 is a bit of a problem. Sticky inflation expectation is there at the front end, and there is a diminished fear of recession on the other end. So overall, I think the 10-year yield at 4.41%, which shows a gain of 1.8% today, is a significant single-day move up in the 10-year, a clear sign that bond traders are repricing inflation expectation upward again. So this could be one way of looking at it. The other way of looking at it would be that foreign bond holders are dumping the 10-year, and therefore the price of the 10-year is falling down and the yields are therefore going up. That's another way of looking at it. So rising long yields put pressure on equity valuation, especially tech-heavy indices like S&P 500. So that's also not a good thing. And the 10-year yield at 4.41 also contributes to the 0.64 that we see here, because it's the difference between the 2-year and the 10-year yield. And then you also see gold at all-time highs. Typically, it's a signal of risk aversion, stagflation fears, or a hedge against fiat debasement. So if US dollar is going weak, and if US dollar is losing value, then gold denominated in US dollars will demand more dollars for the same ounce of gold. And therefore, I think that's the reason why gold has still stayed much higher, despite going above the all-time high and above the line of resistance on top of the parallel channel for gold. It is staying above for a long time, defying gravity. I think if you put all these things together, for 10-year yields going up, which means bonds are not in demand, money is going out of bonds, then we are looking at gold going up and dollar going down. All these things makes one feel that the faith in US as a reserve currency and as a safe haven for investment during troubled times, that is going away. And the feeling is that the trouble is centered in US. So there's a flight away from US. That's my perception. Because I'm a Canadian, maybe I'm a bit biased and I'm thinking that way, but I would like to hear from you, your comments, because as investors, we can't afford to have political biases and others. So I would really encourage you to give me your feedback of what you think is happening here with the yields of the 10-year going up, the DXY going down below $1 and stayed below $1 for many days now. And also this 2-year to 10-year spread of 0.64 and the high price of gold. Even Bitcoin is defying the correlation with S&P 500 and moving in a different direction. Is it possible that Bitcoin is now going to be a store of value at par with gold? We don't know, but I'm thinking I would like to hear your feedback so that I can right size my opinions. Now, if you are a bull, support around 5125 held for now, so that's a positive. And the lower wick of today's candle happened to, if you see the lower wick of today's candle, it happened to be pushed up. So basically sellers were trying to push it down and the bulls managed to take it up. There is no buyer exhaustion as such, but the bulls were able to save the day. So that is the saving grace I think one would look at as bulls. And there is some chance of holding this pennant with a bounce because of this wick that we see here. So there is some strength in the market. So bulls can take comfort in that. But if you are a bear, then clear bear flag or pennant structure with failed bounce attempt is visible here. So you can see this structure out here, right? So this is what I'm talking about. So it's a clear failed attempt to break down is there. And then you are looking at MACD plus RSI. So you attempted to bounce, you failed, you came back again, and tomorrow we'll see whether this attempt fails. But bearish pennants always break down on the downside. So if that happens, that is something that the bears have to look forward to. MACD plus RSI momentum is negative. So that's another thing that is in favor of the bears. Gold rally is basically market bracing for uncertainty or stagflation. So that's another factor going in the favor of the bears. And volume profile is heavy selling on down days. So I think all of that put together, I think bears are much more comfortable at this point of time as compared to bulls. However, the movement downwards in a bear market is always not in a straight line. There's going to be some bounce backs and then follow through. So those kind of things would happen. And now you'll say, Raj, we are here for genomics. Why are you talking so much about S&P 500? I'm just building a foundation for what I'm going to say about the genomics so that you understand the context. So for tomorrow, I think unless there is a major news catalyst to the upside, like for example, Jerome Powell coming out and being very dovish, or we have earnings on the tap, right? Tesla is going to report, Google is going to report, and some banks will report. So if there are some good earnings report and good projections going forward, that can give a boost and we can jump back up again in order to test the resistance at 5,300. And if we break through 5,300, it's going to be fantastic. But eventually we are coming down again because the overall bias is bearish unless we have higher highs and higher lows breaking us out of this diagonal line of descent for the bear channel, which is what you see here, this diagonal line. We have to break out above that and have higher highs and higher lows. That's what we are looking for. So until that happens, I think we are looking for a move downwards, and the breakdown from Pennant is most likely. That's what happens most of the time, and we'll have to look for volume confirmation, more volumes, and we fall below 5125, then I think we'll be fine. And in that case, our target is going to be 4950. So that's what we are going to look at. I think 4950 is somewhere out here, approximately where we bounced back last time. That I think would be our minor line of resistance, 4950, and that is going to give us decent support and a little bounce back so that we can try to do a double bottom, then jump back up, and then probably hit this line and then come back down again. That's the way it is. And the reason why I'm still bearish is because the whole world is in a mess in terms of trade, in terms of supply chain, in terms of central bank control over interest rates and inflation, and the geopolitical risks are multiplying by the day. And it has been quite a while since Trump spoke about tariffs, but not a single tariff agreement has been announced with any of the countries. So if the market could see even a single announcement like some country signed, then there will be a little ray of hope. But we don't even have a small country like Madagascar or Timbuktu signing a free trade agreement or a tariff agreement or something like that. There is nothing. And I was thinking that the low-hanging fruit would be to say that there is going to be no tariff on Singapore because they don't have a tariff on US. But that also doesn't seem to be happening. So the government is giving, the White House is giving no hope to the investors for a bounce back, and that's the reason why I'm very bearish, and I'm saying eventually it's going to come back. So that's what I think is my base case. And I think that said, we should go and have a look at genomics. Now friends, in genomics, what's going to happen here is that there will be analysts who will come out with a statement saying that they are keeping the buy rating, but they are reducing the price target, or they are maintaining the price target. There will be some press release like that, and you will see some movements. So most of these movements are based on some kind of sentiment or rumor or something like that. People are clutching at straws. But I personally feel that none of these companies are safe until we have bottomed out and we start our journey back. So in a bear market, the drops will also be very sharp and the jumps will also be very sharp. So if you're thinking of doing dollar cost average, again, this is my personal opinion, not a financial advice. I personally feel that I'm going to keep as much cash in hand as possible because at this point of time, we don't know which way the market is going to go. So if tomorrow the market starts going up because of some positive catalyst, the only person that we can't control or anticipate is Trump. And then the other is Mother Nature. So if Trump tweets something or says something in some off-the-cuff interview somewhere, everything can change for the better or for the worse. Or if Kevin Hassett comes out and says something like Trump is going to fire Jerome Powell another time, then it's going to spook the international investors because the Fed is the last thing that is keeping the faith of the international community on the US dollar and the US Treasury. If the Fed is removed and a yes man is put in place like Hegseth or Kevin Hassett or somebody who's just going to say yes to everything Trump says, then I think US dollar will probably suffer even more. So we can see all the writing on the wall. It is surprising why nothing has changed yet from the White House. I'm hoping it changes very soon, or else all the genomics investors who are supporting a cutting edge technology, they are taking a very high level of risk. And all institutional investors, I think they are sitting on the sidelines and they will grab everything cheap, and also the private equity is going to grab many of these companies for cheap, because retail investors can only pump so much money. Everyone has to retire someday and everyone is answerable to their family for all the investment. So however ideologically bent you are for genomics, I would suggest that you save your powder for later, because there will be more opportunities. That's my humble opinion. Of course, this is not financial advice, so please keep that in mind. And I think all these price movements, they are all random. There is nothing major to support anything. For instance, if you look at Caribou Biosciences out here, right? We have this on 11th of April. Caribou Biosciences is paying 3.9 million settlement to investors. Here is how to get your share. So that's not a good news for Caribou Biosciences, right? And then 5 hours ago, we have lead plaintiff appointed to represent investors in Caribou Biosciences class action. But we are seeing an 8.2% jump. So where is that coming from, right? So it's all irrational movement out there. So I'm thinking that, of course, there is one positive for Intellia out here. So if you look at the news for Intellia Therapeutics raised to outperform from peer performed by Wolf Research. Intellia Therapeutics shares rise after upgrade from Wolf Research. All you need is an upgrade from some research company, and you can't blindly trust all these research companies. You have to do your own research, especially when you are in cutting edge technologies in startup companies which do not have that much of cash runway. So that's what I would like to say, my friends. And with that, I think I would like to bring this video to an end. And I hope you could join me in the live stream, which happens at 7:45 a.m. Eastern time every morning. It's a pre-market live stream, and I can take ticker requests for analysis and answer some questions that you may have with my opinion on it. So look forward to see you there. And thanks for being a subscriber. Please press a like out there to help the channel. And if you're not yet subscribed, please subscribe. Thanks and have a great day. Bye for now.